Well, joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale.
Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
good evening and welcome to Wealth Within Live, the Australian stock market show where you get to ask the questions and then we give you the answers about all things investing and trading. Now, well, concerns about the COVID-19 seem to be fading somewhat in Australia thanks to our swift government action to get the situation under control. Some states have begun relaxing restrictions this month, and the reality is we probably won't know whether there will be further outbreaks of the virus for a few weeks or even months as people begin to regroup and return to more normal, or whatever normal actually is, or a more normal way of life. So as we all continue to adjust to a new way of life, remember that hand sanitizer is now far more important than deodorant when you go out. As always, we will shed some light on the current market and we aim to inform and educate you on the realities of investing and trading. Now, tonight's topic is how to turn a poor performing portfolio around.
That's a more serious note. So if you have a portfolio of stocks right now, you may be concerned about further market falls. However, your biggest opportunity is to make changes amid the current uncertainty. So tonight we'll give you 3 strategies to help you turn a poor performing stock market portfolio into a consistently profitable portfolio. Now, along with our topic for tonight, we'll look at what is currently happening on the Australian stock market, give you our thoughts, answer your most burning questions, look at the stocks that you're interested in, give you our expert opinion, and a whole lot more. Hello, I'm Janine Cox, and joining me tonight is Dale Gillham, and we are Australia's most trusted stock market educators. How are you this evening, Dale?
You made me say all that, didn't you? You really did. You just put all that stuff in there. I didn't write the script tonight, guys, so that was Janine's joke, not mine.
Oh, I just put one in there. You never know what I'm going to put in there in future.
I know. I'm waiting for your pick boxing gloves and your tutu and stuff like that to come out as well. Like, seriously. But, no, I'm good. It's really weird not having people around. You know, it's like the only time I get to see you is Tuesday nights. It's terrible.
Is strange, isn't it? But there were more cars on the road today, I noticed. Which is
I noticed. I went out this morning. I was saying to a student this morning, I went out this morning to get my takeaway cup of coffee, which, by the way, she yells at me about because I've got takeaway cups. So
he has to get a plastic or a reusable lid now.
But there was more cars on, like at 8 o'clock this morning, going to get a takeaway to support the local coffee shop because they're just scraping by.
Yeah.
And there was a lot of cars everywhere, and I'm thinking, why is this happening? This is like the first day I've noticed it. Very much.
All of a sudden, everybody's decided, well, we've got to get on with it.
I think they're going, let's just get out there and do it.
Yeah. They're sick of being at home with the kids.
Let's run the gauntlet and not get a fine. But let's get into the show because I know we've got a real ripper show tonight.
So if you have a burning question for us, on the right of the screen is a chat box. So put your questions there. And as always, keep your comments tonight constructive so that we can assist as many people as possible with genuine questions. Okay.
Cool. Well, now if tonight's your first time, then may I say a big hello to you and welcome to the show. We are excited to have you with us and hope you really enjoy the show. But remember to put a question down if you've got one. Now moving on, it's the first Tuesday of the month and this means Janine gets to look at the Australian stock market. So let's get into the charts and discuss our thoughts on what's going on in the Australian market right now.
Okay then. On the screen I've got the All Ordinaries Index there for you. The monthly chart, of course, because for most of you who have been following us on the show, you realise that we follow the big picture first, always looking at what's happening in a broader sense of the market. So I'll just go right back to the 80s now. For some of you who are not familiar with this, our indices went back to the 80s. They only started recording it then, but we do have data that goes all the way back to the early 1900s, possibly even 1800s, late 1800s, I think, that shows you what actually has unfolded for the Australian market. Now, looking at the All Ordinaries Index, we can see the steeps and the severity of the fall that we've just experienced with COVID-19, unlike nothing we've ever seen before. Even the correction that occurred in 87 did have some pre-warning there as it started to unfold, even though it doesn't quite look like it on the monthly chart. When you're looking more shorter term, that has happened. But what we're seeing now is a bit of a regrouping of stock prices. So we're seeing this sideways move for the last month. More or less the market rose, but didn't really, it was a non-event really in terms of the move on the market. And then this month you can see this second red bar that's appeared is basically inside the range of the prior month's bar. So that's not, so far we're only 5 days into the month, so by the calendar, so therefore we're in the early days yet. So we're looking to see the market push up higher. That's the ideal scenario. But looking at what we can see across the chart, we can see historically that the market has really had a psychological barrier somewhere around the 6,000 point mark. Now we know that's, some big round numbers often produce a psychological impact to markets and they can turn at those levels. But looking at our All Ordinaries Index, we can see there's possibility still for a little bit of a bounce on the downside. But I'll just quickly move to the weekly chart so we can get a better feel for it. So far this week, it's actually looking quite good. Last week was looking a bit dire and it looked like we were going to see another week down.
If we were doing this on Thursday last week, you would have said last week's bar looked absolutely awesome. Because Thursday it was right up the top.
But look what had happened on Friday. The close ended up low on the bar, which when you look at what happens at the end of a week, that we generally say that the players who are in the know tend to close the market out for the week. So what would you make of that close low? Well,
what I'm seeing at the moment is the current close as of today is basically the same as what it was, pretty close to 4 weeks ago. Well, so the market's not going anywhere. It's not pushing up. Every time it tries to push up, it's not getting through at the moment.
So the real question is, has it got enough momentum in some of the biggest stocks? Because that'll be where it has to be driven from. The big end of the market have to drive it. But we need to see the market push back up through this high here at 5,600 points approximately and to get going again. So if we see the market edge back lower, like Dale's saying, it's really a sideways move for the past month or so, then we're more likely to see it soften.
We're getting a lot of people on comments saying, and on emails, hey, the market's bullish, it's risen up 30%, it's got to be bullish. Well, no, that's not bullish, because right now it's not telling me this is bullish, it's telling me there's lots of indecision on that, isn't it?
Yeah, sure.
So, and if this was bullish, last week would have kept going, not just get through that previous peak by a couple of points.
Yeah, I agree.
It really didn't push through. It was just, it got to it, pushed through that high, and then immediately just said, oh my God, and fell away pretty heavily. So it's what we keep talking about. The market rises in stairs and down in elevators, and right now the elevator's got the basement button highlighted, ready for somebody to push it, because it's only got to get some bad news and this thing will fall out like a lead sinker in a pond.
But what are you saying about the bar so far this week though?
Well, so far it looks good, but it's only 2 days.
That's right.
And we've seen this happen last week. We saw it 2 weeks ago. The market moved up. So you're
not trusting the market. That's what you're saying.
No, I don't trust the market at all. I don't trust the US market at all. And people are coming out saying, but what about this and what about that?
Yeah, you're a lot more bearish on the US market than our market.
I'm a lot more cautious, because during the GFC, I was really confident of what was going to happen. It was like, the market was peaking, it was falling, and it was, whilst it was a huge fall, it was quite orderly what we knew what was going on. This is like a dog's breakfast. It's
out of the ordinary.
It's completely disconnected with economics and everything else. Yeah, the US market was looking good prior to March, but we don't know what it's looking like now. They don't even know what it's looking like. We don't know what our market's looking like. Everybody's out of work. So what is going on with companies? What are their earnings going to be in the next 3 to 6 months? We don't know any of that. We don't know how long we're going to be in lockdown for. And when we do come out of lockdown, what's that going to look like?
The market's going to try to factor in advance, say around 6 months in advance of what they think is going to happen. Yeah. So if they think it's actually going to be worse than what they're expecting, then we'll start to see that push back down. But if they're actually expecting that maybe it's not going to be as bad as what we first thought, we're going to come out of this a bit better, things will start to pick up, then perhaps the market will vote with its feet.
But this is telling me they don't know.
That's right.
This is completely telling me, and if the experts don't know, then we don't know. And that's the thing, and that's what's scaring me
So
about
what's
the
going to
market.
take it? What's going to take it higher? That's the question.
Well, you've got to have a lot of positive news because the market won't rise on uncertainty. It'll only go sideways or down.
But hang on a minute, because the news often is still bad or negative, and yet the markets do actually start to rise because the money in the know often is pushing it
but
higher.
you've got certainty,
and then
though.
it's the little people that have no idea, and all of a sudden the market's taken off 10%, and then
But
the
you've
good
got
news
certainty.
comes
We've
out.
got no certainty. Do you know
Yeah.
next week whether we're going to be able to get out and do things? No.
Well, they're saying they're going to stick to that date, aren't they?
Well, they're saying it, but they may not. But then how much is that? What is stage 3? What is stage 2? What is stage 1 again? You know, when are we going to be allowed to fly? When are we going to be allowed to travel? When are we going to be able to all go back to work? And if you
Yep.
are allowed to go back to work, how many people are going to get their jobs back? You know, people that work for Virgin
Well, they're
aren't going
saying
to get
it's
their
what,
jobs back
20%
straight
of
away.
people that are out of work, is it?
Well, they're expecting
And
at
what
least
percentage
10%
of those are
unemployment rate.
casual workers
Yeah.
that are in sort of retail-y type jobs?
But that's what I'm saying. That's what I'm saying is there's so much uncertainty, the market can't rise. Because unless there's certainty, the market won't rise. Because people, the big end of town will be going, oh, I don't know what's going to happen here. So they'd rather stay out in cash, and that's the point. So right now, it's not giving me a lot of faith. But it's not, I'm not saying it's super negative. I'm just saying I'm not super positive. So there might be some good buys out there, but there might be some good buys too.
That's right. Yeah, I
But let's
agree.
get into the questions,
Okay,
our
so now,
emails.
Oh yes, now it's time to get into the emails and we've been inundated with questions again. So thanks for all of those. We've got a lot of questions on the chat as well. So we're going to try to be selective and answer those questions where you've given us more detail on the stock and told us why you want to discuss it or anything else interesting that you raised in general. So our first question's from Chris. Hi Dale and Janine. After watching your channel recently, I found lots of wisdom and helpful advice. Thank you for bringing us the educational and practical stock investment discussion. I have a stock, Newcrest, NCM is the code. The company recently announced the proposed security offer at $25.60 per share or lower for the security holders. I would like to know your opinion of whether it would be a good time to take the offer. Chris, there we go.
I haven't read the offer, so have you?
Look, I generally don't like those offers because often it means that the share price is going to fall to meet those levels, the price level quoted, and that's half of the issue with these offers. And sometimes if a share is a bit bearish or it's been falling into this news, it will often fall right through. And you sit there and you think, well, hang on a minute, they're only offering 10% of the stock. So therefore, how can you justify the price that's below the offer price?
Question then, another, well, not a question, more of a statement. The other week we got asked about Webjet, the offer for that, which was, I think was $1.70.
Yeah.
Right? It came out, the offer got oversubscribed. It went up to like $2.30 or $3 or something like that. Pretty quickly within a few days after everything went X.
Yep.
Okay. Now, Webjet went down again a little bit after that on Friday.
Does that surprise you?
No, it doesn't surprise me, but that's what people are looking at going, well, if I don't take up the offer and it goes up, they feel like they've missed out.
Yeah.
And sometimes things like that happen. Like Janine and I, we haven't read the document, so we can't tell you. We don't know what the offer is and all the details, and we're not going to. Unless we own Newscrest, we're not going to look at it. So I'd suggest you look at it and determine whether it's good value for yourself. But we can look at the stock.
Because if someone had bought the stock and they're in loss, why would you be buying more?
Well, what they're thinking is if I can buy more at a cheaper price, then I'm dollar cost averaging, which we don't promote as well. But I'll be able to buy some more shares at a cheaper price. But generally, you don't get too many either.
Yep.
You know, it might only be a small percentage of your total portfolio holding or your
Then
total
you've got to
holdings.
deal with the
Then you got to deal with them.
taxation issues around those little portions.
Yeah, but
So it's really for the big end of town to benefit then, isn't it?
Well, quite possibly. You know, and that's the thing is you've got to look at, is the stock rising, is the potential to rise, and why do you want to buy more of that share anyway? Because it's got to be a good position that you... I suppose what I was saying is, if I shorten the words I'm going to say is, unless you're going to buy it today, then why would you take up the offer?
Okay, so some people will say, I'm going to buy it because it'll save me on brokerage if I have to buy additional shares.
Big deal. To me, unless I was going to buy it today, and I still like the stock today, why would I buy more of it? That's just a technical view, and that's really, as I said, but in terms of, you know, a fundamental view and that, we're not looking at that, and as I said, we haven't read the offer, so again, you need to read it and determine whether that's good for you and your portfolio and what you need to. But thanks for asking the question. The next question we got is from Arno. Hi Arno, good to have your question on here, mate. He says, hi Dale, what about Janine? Say Janine, hi
That's
Dale
okay.
and Janine.
I'll just sit here.
They always
like
say
a
hi
wallflower.
Dale. I'm pretty much hooked on your YouTube channel and can't wait for Monday and Tuesday nights for some market updates. And I thought I would get in contact with you regarding two stocks I'm looking at closely. What are your thoughts on OML and LNK, as I bought both of these stocks on their lows back in March? My strategy is shorter to medium term for now, only with around 20% of my capital. Very smart. And with the rest, I am waiting until we are certain the bottom of the market. Thanks, Arno. Well done. Really good question, matey. We're going to look at Link a little bit later. We've got another question on Link.
He went into a lot of detail there for you.
He did. That's why we picked his email.
Okay, so do you remember all of that?
Nope.
You read
So
it well,
he bought both of them a couple of weeks ago. He's on 20% of his portfolio. He's in stocks at the moment. He's waiting on the rest. I think that's quite smart.
Yeah,
He's getting in a little bit, which is good. But let's look at his stock.
Look, now looking at it from a monthly perspective, it's still strongly down, you'd have to say. So, look, I would say very volatile, higher risk stock in terms of the picks. So, this is one of the things that we can talk about on tonight's show, in terms of stock selection and what you've got to be thinking about. But why would you pick this type of stock anyway? It's more speculation in my mind.
Well, yeah, Arno doesn't talk about why he bought the stocks and everything else. And this is why we find a lot of people in the last month have bought stocks. And I've seen a few people saying, I've bought stocks in the last month and I've made money. And I went, well, that's great, but that doesn't make a sheep station or help you retire. Just one month when the month was quite bullish. And we had a super bullish month. And the US had an even bigger bullish month. And like best in 30 years on nothing. It was all hot air and nothing. So, and somebody said...
Just an elastic band, basically the market's springing back a bit.
Yeah, and that's all it was. But I think it's a lot of speculation rather than anything solid. And that's really what worries me about seeing the market rise that far in a market where we have zero certainty about anything. And so that worries me. But picking stocks like this, why did you pick it? And that's the question, isn't it? But
really,
right now,
yeah. I mean, at the moment, there is actually a buy signal there on the weekly chart. So he may have actually decided to get into it based on that signal.
Quite possible.
Especially, that's a trading mentor opportunity.
Yeah, absolutely.
That.
But so you're thinking this is all right, it's going to go back up again a bit?
So looking at it right now, it appears that it could rise. Okay, so at the moment, it's a bit hard to tell what's happening this week. But to try to pick a stock based on that little move there, you've got to expect that there is going to be some risk. So, where does a person set their stop loss when you're talking about the trough being so far away from where the current price action? That's 30%.
So that's huge. That's huge risk.
Trying to make a decision about what to do there is going to be an interesting one. But look, if the monthly moves down, and last month's bar, the good thing about last month's bar is it was closing up. So that is a positive sign for the stock, but it's early days yet. So
I just have a tight stop loss, Mano. That's probably what I would actually do.
All right.
So let's get into the next question. That's yours.
Okay. The next one is you've actually pushed it right up to the top of the screen.
How about I go that way? Now you're really stuffed, so you can't actually read it at all.
Fantastic.
I'm just getting you back from all the things. No,
we're actually live, but it's a blooper, isn't it?
No, it's not. Arno's question was a good one.
I know you're going to play it back for me later.
Now you can one
Next
from Brent.
We have an email from Brent. Thanks, Brent, for being patient with us. Hi, Dale and Janine. Love the show and just bought a copy of your book. Can I ask you to please look at Link Administrative Holdings? LNK is the code. All the best and keep up the great work. Now, Brent...
See, Arno's happy because we're doing Link and Brent's happy because we're doing that.
But he hasn't told us why he wants us to look at it.
No, so do you want to skip it now?
I can't do that to him.
Okay, let's bring up Link.
All right, so Link, two people have asked for this one. So
I think we've had some on the chat too.
Now, is there a pattern that we're seeing here? Because I'm looking at a chart.
They look similar, don't they?
I'm looking at another chart and I'm seeing duplicates. Okay, so we're seeing the same sort of pattern unfolding. So maybe Arno was trying to pick stocks based on the way they've unfolded on the chart. If he did, I might give him a bit more.
I think last week Link was in the top performing stocks in our top stocks. I think that's where you see that, and I'm not saying that's the case at the moment with Ben saying,
Brent,
having a look at this. I know some people look at what rose last week, the highest, and then they go, I'll get into that one. So they look at that, and I know some people, they give me strategies where they go, I go, why did you buy that stock? And they go, volume was up and it's at its 52-week high. Well, it's a pretty terrible strategy. You know what I mean? And people do those sorts of things. And I know we're getting a lot of, like, we've had so many people that ringing up at the moment saying, oh, I'm trading FX and I'm trading, CFDs and, and I've been trading for a few years and I'm a trader, and
that really gets you goat, doesn't it?
Well, it does. And I start asking them
Does
questions.
it make you want to swear?
Yeah, it does. It does.
Really?
Don't get the swear jar out. But they go, and I've been doing this for 3 years, and I go, so why are you talking to me?
Mm.
And they go, what do you mean? I said, well, obviously you came to our website and put your name and everything in and you wanted to talk to us. So why are you talking to me? What are you doing wrong? And they go, oh, well, I could be a bit more consistent or whatever else. But then when I start asking them their rules, they've got no rules. They've got no strategy, no trading plan. They don't understand their rules properly. They've done some crappy broker online courses that they think they're a genius now because they've done a cheap, free broker's online course on how to trade FX. Like,
does that make them a sitting duck?
Oh, it does. It's seriously sitting duck city. If you just do a free thing on a broker's website, you're asking to get killed. Mm-hmm. To me, that's what people are doing.
But why is that? Explain that to someone, why doing those.
Because the brokers are wanting you to trade FX, right? FX is the most liquid in the market in the world, but it's also the most dangerous market in the world if you don't know what you're doing. If you're not highly skilled, it's really dangerous because it's about you taking somebody else's money or they're taking your money. So unless you can trade better than me, I will take your money. It's simple as that.
So what you're saying is that basically the teacher is the party that's actually there to take your money.
Correct.
So they're teaching you the strategy that they want you to have.
Correct. And that's why most of them lose. So, but there's people doing that. But anyway, let's move on to the next question. Otherwise, I'll be here for an hour ranting about this sort of stuff.
Okay, Dale, I think we better get into the chat. Yes, just being told. Handle some questions there, shall we? So
FMG for Richard. So
FMG is a good one.
Richard's been waiting there holding his breath. So Richard said, hi Dale and Janine, I'm thinking serious about buying Wes Farmers. Oh, hang on. I must have wrote down the wrong stock. He's wants Wes Farmers. For the mid to long term, once I see more positive buying. Love your thoughts. Best regards, Richard.
Should we forgive him for that? I think we will. Yeah. All right, so looking at the chart there, we've talked about West Farmers, I think, recently, or am I thinking of one of our chats in our meeting? But West Farmers actually looks like it's holding up quite nicely. So compared to a lot of stocks, it's actually recovered well off the bottom. Looks pretty much like our market at the moment in terms of how it's unfolding. So a lot of the big stocks, the big end of town, you're going to see similar sorts of patterns on the stocks. Like we looked at that OML and Link unfolding similar. You might see the same sorts of moves happen here. And it's because it's more a market adjustment than anything else. It's not a stock-driven thing. And that's what you were alluding to before. There's not enough information at the moment. So there's the uncertainty about the performance of the individual stocks, but everything's riding on a tide. Right?
Yeah, and there's a lot of herd mentality happening right at the moment. People, we've noticed a huge jump in people watching our YouTube's video. Like, we're talking 300%. We're talking, there's a huge jump in people commenting, a huge jump in traffic to the website. It's all people trying to understand the market.
And I think that's awesome. And I think because when we think about the GFC and what happened, everybody shied away. So people just disappeared out of the market, put their money back in cash. But now we're actually starting to see people really get it and be around at the right time.
They should have been doing this a long time ago. People wait till something bad happens.
There's that should again. Should I include that as a swear word now?
You can put should in there because you keep shooting a lot. You should all over yourself. But people wait till the hits the fan before they'll do something about it.
Yep.
And so therefore we should be preparing ourselves for these things before we actually get to them. So looking at, like, reading my book, people that read my book 6 months ago haven't been affected by this. People that read my first book before the GFC didn't get affected by the GFC. So you learn beforehand so that you can handle these situations like we're seeing right now.
So what do we think of West Farmers at the end? I
like it.
Look, it's holding up. It looks nice, but it's like the rest of the market. You were saying that it could just turn around by the end of the week and move down because last week's close was low. So it's just a wait and see.
Yeah, I mean, obviously Richard's looking for more positive buying on it, and we're seeing that in the last 2 days, but I'd like to see it move past those previous peaks, and then that would start to get me a lot more excited about it. But right now it's looking all right. So let's go to, there's somebody called Chillax. I'm wondering Ramsey.
Okay.
So let me find Chillax. Says, hi Dale and Janine, recent subscriber here, and I'm impressed with your education sessions. Can you give me your thoughts on share purchase plans that are being offered by Ramsey Health and NAB? We talked about NAB last week, so we're not going to talk about that this week. I haven't read the one on Ramsey because we don't own it. So
look, I mean, they're all well, I shouldn't say they're all the same, but it's the concept that's the same. I mean, shares are being offered, you can purchase the shares, but the problem is that you've got all these small parcels, and I've seen portfolios recently that have come across with so many small parcels of shares.
Oh, yeah.
It's just so hard to keep track of, and you need an accountant basically to go through it all.
So
and
why are
work
we
out
getting all these offers coming out for buying more shares at lower prices? Why are we getting that at the moment?
Okay, so what the companies are doing is basically shoring up their bottom line to make sure that they're going to be able to weather the storm. And it's an opportune time. Really, it's a wise decision for a company to do something like that at this point in time. People's shares have fallen. They're starting to see, okay, maybe people are getting excited about the market and some of the opportunities and are saying, okay, these shares look cheaper, therefore I'm going to buy them. But what they don't realise is often the share prices fall down to that level anyway. And then it's about just letting that happen. Let other people carry the risk and just wait to see if the share actually rises.
Okay, cool. There you go. There's your answer. Next one is Ashman, and Ashman's got a question. So let me bring up Ashman's question. Is saying, hi Dale and Janine, as the market is so volatile, isn't it a great time for trading? Are you against trading stock and believe in investing? Please share your view on this topic.
Now he's talking really short-term stuff here by the sound of it. Because if he isn't, then you're not trading anything yet or much, because there are no real medium-term rules being triggered at the moment. Not yet, anyway.
No, but he's saying, are we more for investing than trading? That's how I read it.
Okay.
Do you want me to read the question again?
Go for it.
Go for the question again. He's saying, hi Dale and Janine, as the market is so volatile, isn't it a great time for trading?
Yeah.
Okay. So are you against trading stock
volatility
and investing?
isn't the only thing that makes it a good time for trading. You need volatility, but that's the mentality of people who are trading intraday or day trading, wanting that volatility. That's what they're looking for at the moment. I mean, I don't know, you've had some conversations with people and so have I.
Can I qualify this? Janine and I will trade. We're traders. That's what we do, and we teach traders, and we teach traders to be the best traders in Australia. That's bar none. We do that. We know that. So we're not against trading, and we're not necessarily for investing, but we don't mind people investing. That's okay. But we say to people to be active in their investing, so we do that. But as a trader, you need to trade when you've got high probability of success. And when risk is high, that means you go and play golf, or you go and sit on the beach, or you sit on your hands and do nothing. The last month has been, in my view, it's just been speculation. That's all it is. So the best traders quite often will sit back and just wait for the dust to settle, because it's about having high probability times. Now, a lot of stuff has been jumping around on news and all that sort of stuff. So trading well means being tuned, not only tuned to the market, but also understanding your rules and tools and strategies yourself properly. But at times when you're a trader, you don't trade. You just trade when it's the best time to trade for you, both emotionally, personally, and also when the market's conducive to it. So we're not against trading around these times. There's just, right now, it is higher risk. So why take the risk if you don't need to? Because we can make all our revenue in 3 months or 6 months. We don't have to trade right now. And that's the thing, is a lot of people think they have to be trading to make money. And they treat it like a job, or, where they've got to do it 5 days a week, 40 hours a week. That's not the case with us, and we teach our traders not to do that. Trading is about having the best possible scenario before you go into the marketplace. So, and that's coming again. So we're not against it, but it's a good question.
Yeah, did you want to ask another one?
Do you want to ask another one? BHP, Jared.
All right, always a favourite. Good pick there.
I knew you'd like that one. Jared says, hi Dale and Janine, looking forward to tonight's show. Would you please be able to give an overview of your thoughts of BHPs? PS, I'm currently waiting for Dale's book to arrive in the mail.
All right, now looking at BHP, we can see that it's actually looking like it may have stabilised for the time being. So we can see there was a big push off the bottom, but still the bars, there's not a lot of commitment at the end of each week. So if we're looking at where the closes are, it's not really pushing higher and pushing hard. It's actually just, it's really indecision, like you're saying about the rest of the market. So there's no real commitment here at the moment. We can see that it's very similar to what the All Ords and the overall market's looking like, and you'd expect that because this is one of the big movers in our market. Yeah. But it's just moved up, filled a gap at the moment. There are more gaps on the upside, but we can always see that stock prices go lower before they come up to fill those gaps. So it's about waiting and being patient, I think, with BHP, because, you could sit there in BHP and then all of a sudden it drops out at the bottom and you'll get stopped out. So it's got to be a timing thing here with BHP.
I mean, it looks good, but it's not pushing. It's my same comments for Wes that I would say.
Yeah, well, there's no big money pushing it higher. They're just trying to do the argy-bargy and get a little bit of arbitrage between high prices and low prices as it trades sideways. That's what is currently happening and driving it sideways. So as the price drops, the institutions come back in and pick it up again, push it higher, and then it actually stops rising, and then they push it back down again. So they're just getting small amounts of money from the little ups and down moves as it's moving on.
Cool. All right, so let's move on.
All right, next.
That was our last one. So
okay. It's time that we get into the topic for tonight's show, which is how to turn a performing portfolio around. So tonight we have 3 strategies to help you do this. Number 1 is, and I've read your part of the question, get rid of the dead wood. Ask yourself, have I bought and continued to hold stocks just to get a dividend? I'm sure some of you will say yes to this one in the background.
Yeah, I think there's a lot of people do that. They buy, I mean, there's lots of examples of stocks back in the last decade and even up, in that 2010 to 2020. I don't know how many portfolios I saw that everybody had Telstra, they had AMP, they had some of those other stocks that they just got on the government ones they got on floats.
Yep.
And you're thinking
Commonwealth Bank, they would have done okay. But
Commonwealth Bank, they would have done really well.
Box.
But, and you'd say to people, why are you holding Telstra? It's falling away. Oh, because it pays a good dividend yield.
Yep.
And it's what people don't understand is when you've got a stock like that, and you've got an equal weight, let's say you had an equal weighting of 10 stocks in your portfolio, and this one is falling 30% a year or 20% a year, it's sucking the profit out of your portfolio.
It's the boat anchor.
It's the boat anchor, and that's part of the reason we see, and there's not a portfolio that we see, and we do see lots of portfolios, and we have over the last 2 decades, we've seen a lot of portfolios with people, because people send us portfolios in that Janine takes over for our managed account service that we run, and so we're quite every week or so we're seeing new portfolios and how people are investing, and so we're seeing they're hanging on to stocks for 5 and 10 years that they're still losing money on from 5 or 10 years ago that have been falling for 5 and 10 years and sometimes longer, or they've been holding for 20 years and it's still the same price that they paid for it 20 years ago. So that's, I think, what you're
meaning.
And
right now, I mean, they could be at, 2016, 2017, 18. Look where the market is, look where the market was back then. You're pretty right there.
Yeah, and that's why we say to people, be active investors. So it doesn't mean to be high risk, it just means to be active and exit stocks. And so if you dividend invest and you think you're doing great because you're dividend investing, but it's looking at your portfolio not just as a stock, it's about a group of stocks or a group of investments that you're actually doing, and looking at it in that way and looking at making sure it's growing. If it's not growing 8 to sort of 12, 15% a year, then you're not being active in terms of it, and then you're just being at whim to the marketplace. And having stocks that go sideways and down for long periods of time just to collect dividends, not really smart in my book.
Look, dividend investing is an approach that has been promoted as a way to generate an income for decades, but at the market average, let's say around 4.5%, which is typically what happens over time, you'd have to have at least $1 million invested to make it worth your while, and not everyone has that.
Don't you have that? And
then again, no, maybe. And then again, who wants to live on $45,000 a year? This is probably not the income that you're dreaming of, right? $45,000, does that really turn a light on for anybody here? It may do, I don't know. The reality is, for most portfolios, this approach behaves as a boat anchor, and as it encourages people to buy and hold, and this drags down your return, right? So that's the problem with dividends, and it's been encouraged by the industry for so long for people just to pick up stocks and assume that they're going to be able to make an income out of their dividends. Everyone talks about it.
I know,
but it's you might get a payment twice a year. Is that like a Centrelink payment almost? Or
but
not?
people don't think that if I buy BHP for $30 and sell it for $40 and I make 30% on that, that's income to me. They don't think about it. That's capital gain, but they don't.
It's classed as an income or dividend yield.
But it's still income for me because I've sold something at a profit. I've made money. So if I go and buy this pen for $5 and sell it to you on the street for $10, I've just made $5 income.
Yep. Okay.
So it's the same thing to me, and so people think.
And that's what they can't get their heads around.
No, to me, buying and selling stocks gives you income. So because with a portfolio, and what a lot of people may not understand is with a medium-term portfolio, you're going to turn over 1/3 to 2/3 of that portfolio every 9 to 12 months. So as you're turning it over, you're actually pulling money, your income out if you need to run on that. You're pulling that out of the market and reinvesting the remainder. of
I think
whatever
more
you
people
need.
are starting to get it now. That they're not to be afraid of selling because they're worried about paying capital gains tax because this is what they've been told for so long.
Yeah, and also that's another issue that we deal with in my book, How to Beat the Managed Funds by 20% and Accelerate Your Wealth. It's like pay your capital gains tax. The more tax you're paying, the more money you're making. It's pretty simple. And we can do things to get rid of that. But let's get on to number 2. So number 1's not holding stocks because they're dividend yielding and
Correct.
obviously when they're falling away. Number 2 is clean up your portfolio and get rid of those small little crappy holdings that are just a distraction. So many times we see portfolios with a whole lot of stocks with a whole lot of not very much in them. So that means selling stocks that are unlikely to have an impact on your return because the weighting is so small. So I don't know how many times I've seen portfolios where the weighting of stocks 1% or 2% or 5% of their portfolio. It's not worth having. Get rid of them all.
People tell us the reason that they're buying these stocks is often because they actually got a tip from somebody. So often when we look at a portfolio and see these small holdings, that's what's happened. They've read some broker statement. Someone's told them, oh, you can make really good money. They've heard a CEO say something about a stock, but they've thought, well, this is a bit more risky, so I'm not going to put the whole house on it. I'm just going to put a little amount, maybe a couple of $1,000s on it, and then we'll see what happens with it.
Why are they doing that?
Well, I think they're doing it it's greed. It's like, pure utter greed. And that, in the end, is a distraction from what their overall portfolio needs to be doing.
So they go on a chat forum, I get a tip from the pub or wherever they've got it from. Somebody says, this stock's going to go through the roof, you're going to make 500% on it or whatever else. They go and put $1,000 into it. It doesn't do what it's expected to do. And then it becomes one of those stocks that sits in your portfolio and does nothing for so long.
Well, it's a conversation starter at a dinner party, really.
Yeah.
That's all it is, isn't it?
Yeah, but they're getting into it for pure greed to try and make a phenomenal amount of money. And they don't put much in it. And that's where, and I don't know whether any of you guys and ladies have these stocks in your portfolio, but it's so common for us to see these stocks in there that are just, sometimes the position sizing is like, gone down to $100 and $200 from $1,000 or $2,000 because they've just tanked and gone the other way.
Yeah. So if you haven't done so already, just put all of your stocks into a spreadsheet and then add up the total value and then work out the weighting as a percentage of the total for each holding, and that'll tell you pretty quickly. If you're holding something that's less than about 8% of the total value of the portfolio, I'd say probably 5 would be the...
5
would be the absolute minimum. If you're holding something less than 5, just
get rid of them.
What's the point in holding it, really?
Yeah, there's other thing too, is if you're holding stocks that are falling in value, and that because, you've only bought a little bit and then they've fallen in value, they're a constant reminder of a mistake that you made. And so it's a negative thinking. So when you look at your portfolio and you see these stocks that don't have much of a position sizing or stocks that have a heavy loss sitting on them and you see this negative figure, it constantly keeps reminding you of the mistake you made when you bought them. And so that plays on your mind and it holds you back. And by cleaning those up, and it's like I always say to, my mum always pulled the Band-Aid off really fast because it lessens the pain. The quicker you clean your portfolio, I did, but anyway, but she still gave me a kiss at the end of the day. But get rid of them as quick as you can. Just get rid of all the stocks that are causing these issues with your portfolio, like small position sizing, stocks in big losses. Clean it all up, put the money into other stocks, and it'll work on this in a positive way because you're not being constantly reminded that you made a mistake. So please do that. But as I said, sell stocks that aren't getting you a return or going to have any sort of significant weighting on your return. So, Janine, you can do number 3.
Oh, thank you. Number 3 is probably one of the most important decisions you can make to turn your portfolio around. Set a goal for your portfolio and then only buy stocks that suit the goal. So this is about having a criteria for the types of stocks that you choose. Once you've set the goal for what you want to achieve, then it's about saying, well, what sort of stocks are going to be my workers to actually help me deliver that? Someone I was talking to the other day thought it was a novel concept when I was telling him, you need to think about it, these stocks, BHP, Rio, as your workers.
Yeah, but to me, that's a good way of looking at it. Can I ask you a question? Is when you're talking to somebody that's looking to come on into our portfolio services, do you say, well, why did you buy these stocks? What's generally their reasoning for buying different stocks?
Either someone's told them to buy it, someone's advised them to buy it, or they've heard something.
Okay, so there's no why other than it was a tip.
There's no structure in terms of the way that they've created the portfolio and then selected the stocks.
Yeah, and that's really what we're trying to get at, guys and ladies, is if you were to go and buy a car or a house or something else, you have an idea, like, you know, I'm going to buy an SUV, or I'm going to buy a 4-door sedan, or I'm going to buy a 7-seater, or I'm going to buy a house that's got 4 bedrooms, and it's going to have an ensuite in 3 of the bedrooms, and et cetera, et cetera. You've already got a plan of what you want. But the challenge that what we found most people do with the stock market is they just see a stock and just buy it and throw it in their portfolio. And that's the worst way to construct a portfolio.
Just picking up a stray animal, isn't it, really?
Well, it is. It's just like picking up stray animal. To me, it's like shooting a shotgun into the wind. Pellets are going to go everywhere, and some will hit and some won't. And what we're talking about is you need to have a process and a structure, because not all stocks will suit the style of portfolio that you need for yourself. So you could be somebody who's 18 or 80. You could be somebody that needs capital growth. You could be somebody who needs income. You could be somebody who needs both capital growth and income. You might be a high-risk person or a low-risk person. But there'll be different stocks associated with all of that you need to look at and narrow it down. And often people say to us, you know, they go, I want to trade overseas. I go, why? And they go, because there's so many stocks. There's 500 stocks in the US or 5,000 in the US, you know, and I can buy all these stocks. And they go, oh, this broker has, you know, 2,000 instruments I can trade. And I go, wow, you're going to get even more confused. Whereas,
how much time have you got?
How much time have you got? Whereas I could say to you, our students come down to about 50 stocks. That's what they do.
Well, some of them much less than that.
And some of them even less than that, because this is the style of portfolio I want to create, and these are the stocks that fit that, and then you trade those stocks so you get better returns, less stress, less cost, and make your life a lot easier. But that's really what we're talking about here is having a purpose for your portfolio construction and setting those goals down, and from those goals then you set your rules down. I'm only going to buy a stock in the top 100 stock. I'm only going to buy stock that has a liquidity of this many dollars traded per week or day.
I'll never forget when one of our students was studying, and when we told her this, she just breathed a sigh of relief, because it just made everything so much simpler.
Off. Yeah. Took the pressure off big time. It's like, I don't know, I've been into an ice cream shop and they say, what colour do you want? I went, oh God. There's about 30 ice creams and I love them all. Which one am I going to pick?
I just go, I'll have one of those.
One of each. Thanks. But that's it for our topic for tonight. But let's get into some more emails. But before we do, remember, hit the subscribe button now. And whilst you're there, just give us a big thumbs up on that like button too. The more likes we get, the more we like you. And the more questions we'll answer. Now we've got a video question, and we love those video questions. We had an awesome one last week, and we got another one this week. In fact, if you put a 30-second question on a video, we will give it priority. We'll always play it on our show. So stick your phone in front of your face, stick your iPad in front of your face, sit in front of your computer, webcam, and record us a 30-second question and email it to us at info@wealthwithin. And we'll stick it on the show. We'd love to see you. But this video question is from a young guy called Richard. So take it away, Richard.
Yeah, g'day Dale and Janine. My name's Richard. First of all, I wanted to thank you for helping me spark an interest in the stock market, and also for providing a heap of wisdom and practical advice on how to go about logical and strategical approaches to the market. My question for you today is, do you think in the current economic climate within Australia and the world, given COVID-19, it might be a smart decision to invest in a bear market ETF such as BBOZ? Now, Dale, I know you don't like ETFs, but would still love to hear what you reckon. Anyway, thanks, and keep up the great content, guys. See you later.
Yeah, that's a good question, wasn't it? That's a really good question. I know we covered BBOZ. Thanks, Richard, by the way, too. Thanks for sending it all in. I know you noticed something on his top shelf. What was that?
He's got a little, had a little ornament that said relax, and I thought, how wonderful. It's there, subliminal in the background, just sending out that vibe.
I'm relaxed, Richard. Well done, it worked. We looked at BBOZ last week, and yeah, you're quite correct, Richard. I'm not a big fan of ETFs, but I'm a big opponent of index ETFs. I know a lot of people new to the market get into index ETFs thinking they're getting diversification. I talked a little bit about it on a podcast I did today. I was talking a bit about diversification, and I call it diversification. But I remember a few months ago I was talking about specific ETFs in terms of areas where like robotics or artificial intelligence, areas that most of us don't really understand much of. So I'm not too against those sorts of ones. But nothing index, forget about them. And BBOZ is an ETF It's a bear market ETF, but it's a one that follows the market as it goes down. So do you want to bring it up and we'll have a quick look at it for Richard. So in a bear market, you know, if you want to invest in a bear market, then a bear market ETF is probably the way to go. And something's just happened with our laptop. What happened with it?
It just disappeared, but we did actually look at BBOZ, I think, either last week or a couple of weeks ago. It's basically been falling until just recently, and it did shoot up with the recent rise on the market and has pulled back down. So you'll remember when you saw the picture of our market having pushed up off its low, well, BBOZ's done the same sort of thing, only it's pulled back much harder. And there is risk on the downside at the moment. So I would never just sort of make a statement about, okay, given the way that things are in Australia and around the world, should we do X or should we do Y? Because it's always the chart that's going to tell you whether that's the way to go or not. And I think with looking at the BBOZ chart, you know, I mean, you'd have to make your own call and decision on that, but you'd have to be asking, well, why would you put your money into that right now, given that there's no real direction behind it? So that's really the decision there on BBOZ that I've got at the moment. So thanks for that question. It was a good one, Richard, and thanks for the video. It's fantastic. Good to see the family in the background there behind you.
There's a couple of, then there's one, you can read that and I'll get the laptop going so we can look at more stocks. There's one from Ben.
Now, to anyone who hasn't watched this show before, Dale never hands me this.
No, that's...
So once he's given it to me, he's going to find it really hard to get it back off me. Now, I've got a message here from Cody Schilling. G'day Dale and Janine, have read both your books and the use of stop loss and a simple rule of buying and selling on confirmation, not speculation, has transformed my success. Best podcast, thank you. So I'm assuming, Dale, that he really liked that one. So excellent that you've put that into play and are using some really good strategies there. Now, Bill Mann said that he loves the show as I'm one of your students practicing on paper. So that means to some people who may not be aware that he's actually paper trading. So I hope you're getting in there and doing all of your back testing as you've been taught, and then putting it into practice as the stocks are unfolding. So that's really what you're talking about. You have rules that you've back tested, selected based on the results of the back testing, and then doing the paper trading to see what the results yield. So what are your thoughts on SVW? We will come back to that at some point. So you've had different perspectives on it by different analysts. Now, one thing I will say, that as you start doing the studies and you're building your knowledge, you're still a bit, let's say you're on the L plates, so to speak. So what I would say to you is don't get distracted by what other analysts are talking about when they're discussing this stock. It will only confuse you. You really need to be focused and really just start to trust the analysis that you're putting into practice, because nobody is going to have a better opportunity to make good decisions on this than you, because you're the one who is actually testing the set of rules in history. You don't need to ask Dale or I, well, does that set of rules work really well on SVW? Once you have this knowledge, you can actually backtest it yourself, put it into practice, prove to yourself that it actually works over time. And that's the beauty of this and the power of the analysis and the way that we teach it to you. But it's just about getting your confidence and over time building yourself up. So if you haven't gone on to do modules 4 and 5 and you're still on module 3, then I'd really encourage you to get moving on and do the rest of that work, and you get an opportunity to be part of our trading support service, which will just grow your knowledge like you wouldn't believe. So that's really great. Thanks very much, Bill. Great to see that you're getting on the right track there.
I think we're stuffed. I don't think we've got a laptop for this.
SW Reef, hey guys, love the channel and what you're doing for the punters on YouTube. If you get a chance, can you have a look at RED? So that might be one that you'd like to email us in and just tell us why you're looking at this particular stock. I think would be a great way to do that. Looks like a lot of people have got their family watching the show tonight, which is fantastic, and thanks for that.
I know there's a few questions. There was a question by Cody at 6:57. I know there was a question there. Did you read that one?
6:57. Let me see if I can find that. And
We've also got a few more emails.
Cody's the one I read. Yeah, I read that one. That's great. I've got another one down here. Hi. So people have wanted to look at Lend-Lease Group and some of the stocks there. Apologies if we can't show you the stocks tonight, but we will come back to you next week.
The laptop's only about 8 weeks old, so we shouldn't have died on us.
Someone's asked, Gekuta. Woohoo! Can I do that?
You can do whatever you like. I haven't got a laptop.
Love you guys. Thank you. Do you like CCL as a stable long-term investment? I've just entered position today. At this point, it may go lower or rise. Now, obviously don't have the chart right in front of me right at this moment, but I wouldn't necessarily call it anything right now a stable long-term investment until we have the more medium to long-term direction telling us that the stock's more likely to move up than go down. So that's really all I would say to you. We always focus on the monthly chart, and the real reason for that is because that's telling you what the bigger picture direction is. So if that's not pointing up yet and moving in the right direction, then you really got to be careful there. So that's for CCL.
CCL's normally a stock that's not too bad for a portfolio to sit in for a longer term anyway. It generally trends quite well for a longer period of time. I mean, it's one of the world's most recognisable brand, isn't it? Really.
Yeah, I had to laugh here. Andrew Fuller saying, really enjoying Module 5. Oh, isn't it fantastic when you get to the end and you're bringing it all together? Looking forward to the show. I won't ask your advice on any stock because you're teaching me via the course.
Yeah.
Oh, that's very cute.
Do you want to, I'll go through a couple of other questions while they're still trying to get the laptop up. Did we get it up? No, we didn't get it up. So,
look, there's one here which talks about changing rules. And I remember, Dale, remember that presentation that you did when it was one of our Art of Trading workshops, and it's about having the back testing, selecting a set of rules to trade a stock, but then stocks can unfold and change in different ways as they begin to unfold, and it's about using everything you know on the chart. So this is a question that says, it was more or less about, do you change the rules? Right, through the chart. So do you have rules at the start and then do you change your rules? Do you want to answer that one?
The answer is it's sort of a double-edged sword when you're looking at rules for trading. We always have set rules for trading. So before we enter a stock, we know the rules we're buying. We know the rules we're going to use for selling and how we're going to manage it. But then what happens is the stock starts to unfold, the market then changes personality, etc. So part of what we teach people is to use everything you know all of the time. And so there's a thing or a statement or comment called using the art of trading. And the art of trading, for some people, it's a good catch out. It says, well, I've just changed my rules, so that's the art of trading. And I remember having one of our advanced students that did a trade and he broke rules. And I said to him, well, why did you exit there? That's incorrect. And he goes, I was using the art of trading. And I said, yeah, but the art of trading still has rules.
He was throwing it right back.
You broke the rules, so don't tell me that's the art of trading. So
you're saying he jumped out at any price rather than using a rule?
Correct, there was no rule.
Right.
There was zero rules. I said, you tell me exactly the rule you used. And he couldn't. He said, that was my art. I just thought this. And I said, well, you can't just think this.
Yeah.
What is the rule?
Confirmation.
You can change your rules based on knowledge and experience. So if you're knowledgeable and experienced and you understand that the market's changing, and for example, because the market will move up or a stock will move up, go sideways, move up, go sideways, move up. Roughly, that's what will happen. So in those sideways moves, sometimes like a rule like a trend line might get you out, but you know it's only going to go sideways for a little bit, so you ignore that rule and set another rule for an exit in case it falls away. So there are things you can adjust there, but generally...
That's a really good question.
For a lot of people, it is, don't change your rules. If your rules work, they work, and that's really what it's about.
I've got one here from Kim Connor. Hi Dale and Janine, thanks for your program. I'm learning every day. Could you please let me know your thoughts? You mentioned a couple of stocks, but what is really interesting was at the end, why is Telstra not going anywhere?
Good question, isn't it? It really is a good question. And the thing is, Telstra, I'm pretty confident it's had its low. It's not going to go below that low. I think it was 252, I think, was it? I can't quite remember. But I'm pretty confident that's the low. It's just not gaining momentum at the moment. But you've got to remember Telstra was a stock that fell away for 10 years. You know, so
it's got a lot of baggage.
It's got a huge amount of baggage, and the people remember that, and so they're not getting too excited. Telstra would have to probably double in price from where it is now before people start to get excited about it.
But you'll see it on a chart well before that happens.
Yeah, you will. You'll start seeing it on the charts and everything else. But it's a good question. So it's not going anywhere. It's paying a reasonable dividend, which is a nice little bonus. But it's a stock that, you know, if you've got a 10-year outlook, it's probably okay to put in your portfolio. But if you're more of a trader, it's probably not something you'd put into your portfolio. Now, I know we had a question from somebody that was asking about what rules do we use to get in and get out and stop losses and stuff like that. And somebody did. I'm not sure whether it was on that or I saw something. I know if you're sending an email through and asking us to cover that on the live show, and if you're sending it in after 4 o'clock, it's never going to get on the show. It's just something that we put our script together a little bit earlier so that Janine and I can chat about it, etc. So, but I'm not sure whether somebody put something in that or whether it's on there, but we won't give you all our rules. It's just if you want to understand our rules of how we buy, how we sell, how we manage trades, where our stop losses, where we put our stop loss exactly, you need to do our courses. That's not something we're going to give out for free here on YouTube. And part of the reason is that's our IP, and obviously we have students that Janine and I just love mentoring and we help all the time, but part of it is you won't understand them anyway, because there's a huge difference between knowledge and understanding, or information and education. I can talk about a trend line till the cows come home on this, and most people will go, yeah, I understand what a trend line is, but I know 99% of you don't understand what a trend line actually is and how to use it, how to draw it properly, how to make money from it. You've got a conceptual idea of what it might be, that you might have read it in a book or on an online portal somewhere.
But you still need to be taught properly.
Yeah, you need to be taught. The trend lines, the trend line sections in our modules is bigger than our book, bigger than my book. It's actually probably put all the words in two of my books and put it together, and that's the trend line section. It's breaking it all down to really, really understand it. So that's part of the reason why we're not going to share with you all our rules that we get in and get out of. If you are wanting to learn them, then do our course. If you don't, then that's okay as well. We're happy with that. But I've got a question. I'll go through the next email question.
Okay.
They bought me another laptop, but they didn't realise that there's no charting software on this laptop. It's another new laptop we bought, so I can't use that, so I apologise. But anyway, so let's look at this next question. It was from Christine. She says, hi Dale, found out about you guys from the YouTube channel, and I'm also interested to come into the Trading Mentor course. She's bought $17,590 of Beach Petroleum at $1.45 a share. I was wondering if this is a good share to hold long term. What's a fair price, and at what price should I put a stop loss? Looking forward to hearing.
Now I know this share reasonably well, so my answer direct to you is actually no. It's not a good stock for long term. It's an example of, you know how we talked about NAB some months ago, even though a completely different type of stock altogether, different volatility. Well, NAB was trading at the same price it was 10 years ago. Recently.
Yes.
So, and this is another stock that was trading at the same price it was 10 years ago. And it's where it is in its overall picture. Like, I'm not saying that at some point it may not be an opportunity to hang on to it, but it's a really volatile stock that moves really quickly, and it has just had lots of ups and downs along the way over the past decade or so. So it's a good trading stock. This is a really interesting stock to study. But as far as a long-term buy and hold, I'd say definitely no for this one. That's just my opinion. You need to look at the chart and decide for yourself when you see it.
You do. And that's the thing is a lot of people, like, is it a long-term buy and hold, and what's a fair price? Like, what is a fair price for a stock?
Well, that's a question, isn't it? It's whatever the market's willing to pay at the time.
Yeah, it's whatever. The next question we got was from Alla, who asked, hello Dale and Janine, what are your thoughts on Rio? Rio is one of those good quality stocks that we should be buying in the current market, as it's currently trading at a significant discount. Regards, Alla. And I know that's another stock that you love, so that's what I thought.
It's a great stock. It's a stock to have on the watch list and be ready to purchase when the momentum's behind it. However, if it's actually going down or sideways, which it has been, obviously with COVID, and then with the market rebounding, it's come up somewhat. But still, a lot of these mining stocks are just trundling sideways for now, and there's still risk on the downside there. So it's a matter of just wait and see. And we've been saying on the show that we think there's some awesome opportunities, decade and multi-decade opportunities coming up. So it's just about being patient, really, with Rio. See how we just took it back there? Sleight of hand.
I'm just sneaky, aren't I?
While I was talking. I should have hung on to it, shouldn't I?
No. This is you can have that controller now if you like. I don't need it
put
anymore.
it in the middle.
Jim's asking any thoughts around Warren Buffett's on taking a loss on the airlines. He states that he knows what he knows, and USA has given him wealth. He's bullish long term. What would you say he is short term? I know he's selling stocks
He's
at
gonna
the
answer that
moment,
one.
and he's sold out of some airline stocks at the moment. Now, we don't buy airline stocks.
He's in a lot of insurance, really.
He's in a lot of insurance and that sort of stuff. But what do you think his view is? Buffett's been in a lot of cash for quite a while.
Yeah, look, I think he'll be looking for some short-term opportunities and sees that the airlines are not going to go anywhere in the short to medium term. And so there's a big question mark. Let's get rid of it. It's the same sort of thinking, isn't it? Chuck the dead weight out of the portfolio.
He's doing exactly what we've talked about, and that's really... And this thing is interesting. People, when they talk to me about Buffett, they go, oh, Buffett's buy and hold. Well, if you buy and hold, why are you selling?
Yeah. Yeah, because there's
not
often
buy and
articles
hold.
in the news about him selling something.
Buffett's not buy and hold. He says if you buy and he'll hold it till he determines it's not going to make him more money anymore, and then he'll sell it. But that might be 10 years down the track or 5 years down the track, and he generally buys great undervalued companies and then rides them out for the long term, and that's what he's doing. But if he's not being in airlines, what's that actually telling you? And
Now,
if he's in a lot of cash.
There was actually, if we can move on to another one, if you finished on that one,
No,
did you want to say something else
you can
on
keep
Buffett?
talking about Buffett.
Look, I didn't want to actually. I wanted to talk about ResMed. I know you've got the finger on the pulse there and don't want to let it go, but someone raised ResMed earlier in the chat and was talking about would you buy it on the Australian market on the ASX or the New York Stock Exchange, and how would you choose which one to buy it on? I thought it was a really interesting question, something out of the box.
Okay, well, answer it.
Well, look, I mean, in reality, if you're in Australia, I'd stick to the Australian market and just buy stocks in Australia and keep it really simple. But there are some people that try to purchase with an overseas account.
Yeah, they do, and it's easier now than what it used to be. There used to be, and probably brings me to another question I get. I'm constantly getting asked the question, what platform do you use, and what platform should you suggest I use? And it's like, well, we don't suggest brokers, and you've got to separate that. A broker platform is not how you trade, it's just where you place the trade. How you trade is how you get to the point of saying, I want to buy something.
Yeah.
And brokers' platforms are places that Janine and I never do that with. We absolutely 100% never, ever, ever use a broker platform to tell us what we're going to buy or sell. That's all the stuff we do on Optima, the program we use. The broker platform is just a portal.
But even Optima doesn't tell us what to buy or sell. Let's make that clear.
No, that's our knowledge. But I'm saying we don't do that on broker platforms, and so people do that.
Yeah.
But some of these broker platforms, and people say to me, "Oh, you can trade this market, that market, that market, that market, that market, that market, that market on this. It's a great. Do you like that platform?" And it's like, no. Just because it's got 15 markets to trade doesn't make it a better platform. It just gives you more confusion. And that's really what I find it happens with these people that say they're traders. They've got these platforms that they don't really know how to use. It looks whiz-bang because it's got all these things all over it.
But everybody talks about the US market, and you even talk about it.
Yeah, I do.
So, how do you tell somebody who's sitting out there who doesn't know?
Simplify. I talk about it because it's part of what we do. I mean, obviously, we've got business interest in the US. We own parts of businesses over there, and people have been asking us to go to the US with our education for quite a long time, which is what we're doing now. So therefore, otherwise, I wouldn't be looking much at the. 2 years ago, I wasn't looking at the US market.
Look, I've always looked at the US market as in the broader chart, and you have too.
Yeah.
But more from a big picture of understanding what's happening on a global scale.
Yeah, and that's really what it is. But now I'm much more into the stocks because I do my interviews with Jim. I launched my book there 18 months ago. So it's about me knowing that. But if I was just people watching this show, there's no way I'll be looking at the US stocks and US market because there's plenty of money to be made here in Australia to make your life easier.
But if you're talking to someone in the US, then you'd be talking to them about US stocks.
And I do.
That's in their
and I talk about that with Jim on my interviews with him. Because in the US, they say the same things in the US as they say in Australia. Invest overseas, invest overseas, invest overseas. That's what they talk about.
Yep.
But it's diversifying your portfolio when you do that. And I was only reading on my podcast today, I was reading out of the ASX shareholder survey or study, and it was saying that if you diversify overseas, you actually get a worse return. It's fact. It's in the ASX shareholder survey, but people still want to go overseas because they see your Apples and your Microsofts and your Zooms taking off and all that stuff. So then they get that fear of missing out, so they try and jump into that. But then you've got all the other issues around where you've got to have a US dollar account and all those other bits and pieces. It's so much easier just to buy like your CSLs and everything else. From me, but we've had a few questions on A2 milk, and I know we've had some over the last week, and people are saying, and it's taken off, and rightly so, and it's done very, very well. But is this time to get into A2 milk right now?
I'd say no.
And I'd say no. I'd say it's headed way too high at this point in time for people. So, but outside of that, I think there's some really, really good questions on here that we just can't get to. And as I said, our laptop died. I don't know why it died. It's dead. And the other laptop we bought in, I can't log into at this point in time. So I do apologise.
We haven't been told to move on, so can we do one more?
Well, it's 8:00. It's at the end of the show. The director's obviously panicking and pulling his hair out over the other end. Final stock. He's saying final stock. Now he's talking to me. Yeah, Ben's going, I know there are 2 books. Which one should I purchase first? Either one, it's okay, matey. You can pick any one of those ones. They're both really, really good books. What have we got here? Hi, Dale and Janine. I'm fairly new to investing and purchased APT at $9.80, and I'm not sure where a place is to set a stop loss for it being a little more volatile. It is a volatile stock, very, very much so.
Look, I mean, you could just refer to your book for ideas on where to set stop
APT,
losses.
a lot of people jumped on the bandwagon because that Chinese company, whatever they call it, I forget what it's called again, bought 5% on it, and they're thinking, and so then it took off like a rocket because they bought that 5%. But now people are seeing it going, should I get in on it now? And the answer is no. You should have, if you're going to be in it, should have been on it weeks and weeks ago. But it's not a bad stock. But again, do you want to get into it now?
Stop losses are set based on how much risk you really want to take. So you've actually got to look at that and decide. And I had a conversation with somebody last week about this because we were talking about percentage stop losses. And I said to the guy, look, what are you comfortable with? If you had a loss of $50, would it worry you? If it was $100, would that be a problem? If it was $1,000 and then kept going up and up? And I used to do this at the Art of Trading workshop as well and see the hands go down as the figure went up higher and higher. So I think there's the first consideration is how much are you willing to risk first, and that determines how, helps you work out how big a exposure you should really be having into the market. And then it's about the technical stop loss really. So it's understanding some rules so that you can set a technical stop loss, and you can only get that with research. So there are many different stop losses that you could apply to APT.
Yeah, it's just your intention. I think that's really what it's about. What is your intention with APT, if it's short, medium and long term? So, and
that can dictate whether the stop's tighter or whether you leave it a bit looser. It depends on the term of the trade as well.
Janine and I could give you probably 3 stop losses right now, and I could pretty much guarantee you that in the next 2 weeks we'd probably change our mind possibly on that, depending on how it unfolds. So you need to understand what the stop loss is, how to enact it, and when you should be enacting it, and if you do need to change it. So right now, whilst it's going up, stay with it. If it starts falling away, then...
So what you're saying is, as the stock price is rising, you can change the stop.
Yeah, we change our stop because there's 2 different stops we talk about, and we did do a video on this, or a live show on this late last year, I think it was, on stop losses and what we do. And one's an initial stop loss when you buy it, and another one is as it's running, and trailing stop losses and how you do that. But just buy my book if you're not sure. That'll teach you about the stop losses, and you can use one of those. So get on our website, get How to Beat the Managed Funds or Accelerate Your Wealth, and that'll teach you those 2 things. Now, before we finish up tonight, that new streaming service, Flix.net, Flix.net, that I've been telling you about, is up and running. So, and our Talking Wealth show, episode 1 went up last week, as I mentioned. Episode 2 is going up this week. I know our market reports are going up there, and they are giving me a proposal. They want Janine and I to do a live show on it as well, which will probably be another month, maybe 2 months away, but it'll be on the US market. So do get over to Flix.net and you can see some good information there. There's a 1 hour long seminar that I've done. I've recorded a presentation, which was the one that I did for the group about 8 weeks ago, that I was people saying, can you record it? Well, I couldn't record it, but I've done it in the studio, so you guys can go and take a look at that. It's an hour long, and I've done another one which is going up probably in the next week or so. It's called 7 Steps to Success in Trading, so that'll go up in the next week or so. So keep going back there and having a look. But,
now it's the end of tonight's show, and I hope you've enjoyed it, and thank you for participating. If you have a topic that you'd like us to discuss, send your ideas and we'll look at your requests for upcoming shows. If you'd like to see the show continue to grow, then remember to share it on your social media with your friends and colleagues. Also remember to make sure you put this show into your calendar, as we'll be back right here on YouTube every Tuesday from 7 till 8. And as always, we are happy to receive your questions. So send them to info@wealthwithin.com.au and just type Wealth Within Live in the subject line.
Well, that was a big mouthful. You can breathe now. Janine changed the script, so she had to read all of that without a break. Well, that really does bring us to the end of the show, everybody. And again, we really hope you enjoyed it as much as we have. And we do apologise how the laptop died. I've got no idea why, but we'll figure it out. As always, thank you for joining us, and we hope to see you again next week. But for now, goodbye. Good luck. Good trading.
Good night. I like a good challenge.
Stay safe. Bye-bye.
Bye for now.